Hey guys, what's up and welcome to a new Tesla update video. So today, as per usual, let's go over Tesla, let's go over the market, and let's see what has happened and what we can expect moving forward. So if you enjoy the video, as per usual, don't forget to hit that like button. That does help a lot. This is not financial advice. I'm not a financial advisor, and my membership section on YouTube is live. The link is below $3 a month, where essentially I share my intraday thoughts on Tesla, on the stock, as it's moving throughout the day. If you're interested, link is below. But moving right into it, Tesla closing the day pretty much at $260. This is a little bit lower because this still moves after the market's closed. So it's, if I'm looking at it here correctly, let me just double check that again. It looks like it did close pretty much at $260 per share, which is going to be down a 0.4% on the day, which compared to the market is okay, right? Obviously, fairly in line, arguably slight outperformance, but for the most part in line. Now, let's talk about what this actually means for Tesla, right? What does it mean? What is this bad? Is this good? So let's figure this out. So like I said, and I talked this to my members about this as well, everyone was, very spooked and scary down here. We were looking for the opportunity. It obviously happened, and here it is. Now people are starting to get a little bit euphoric, and for good reason. There's obviously reason to be excited. But as I said yesterday, in my opinion, there's still a little bit more work to be done, right? I said I wanted to go above 263 and hold above 263. I want to start closing candles above $263. And interestingly enough, that's almost what happened this morning. This is the first candle, I believe, that happened. This one right here, this massive red one with the long wick at the top, was the first 65 minutes of the trading day, and we came right up into that 263-ish area. Unfortunately, we obviously couldn't close a candle, and we got rejected right at that level roughly that I talked about just yesterday, right? And the fact that we went up there, got rejected, and you can see the rejection was a pretty decent one, right? We went from 263 all the way down to 256. Like, if in theory you were to buy the top and sell the bottom, just happen to do that, that is almost a 3% drop intraday, which is, a fair amount, right? So that's why I said this level is really important, and how I personally don't think, it's really just yet over for the bulls. Like, they need a little bit more work, because again, this was not only an area of resist or support, I guess now resistance, but old support, because, this acted as a support with these candles you can see here, right? A lot of wicks all the way at the bottom of these candles, right? Never really closed underneath really 263. So now that acted as a support, obviously now a resistance, because we're coming back into it from, bottom to up. You want to close candles above it. You don't want it to act as a resistance, and so far it is. And that's why I personally view it as being an important level to break. But more importantly than that, it's also because this is, of course, a potential, as you can see here, head and shoulders pattern, a bearish, of course, head and shoulders pattern, right? Which the right shoulder right now is pretty much playing out roughly where it needs to be in order for this pattern to still technically be valid and to still be something that you really should not be ignoring, regardless if you're a bull or a bear. Like, especially if you're a bull, you really don't want to be ignoring this, right? And it's getting resisted at the level it pretty much needs to, because again, not on top of this 260 to 263 level being just a resistance level in general, but if we go above 263, right? Let's say we go to 265, that'll be somewhere around where my cursor is right now, right? And that's well into the territory of the head. And the way I look at these head and shoulder patterns is if in this case, the right shoulder ever enters the territory, the range, if you will, of the head, which in this case, obviously the head pretty much ranges from about 280, we'll say, to as low as about 263, in my opinion, right? That's like the range of the head. If we ever start entering into that territory, and especially start closing candles within it, it nullifies the pattern. The pattern becomes a void. It's irrelevant. It no longer exists. At least it shouldn't. That's the way I look at it. So that's why on top of that, right, I really wanted to, as a bull at least, I wanted to go into that territory so that it voids this pattern, because there's, if there is still one thing to be nervous about as a bull here, absolutely this pattern right here, right now. So unfortunately, we're currently getting rejected. We're currently having issues breaking above the level I talked about. On the flip side, the bullish perspective of today's trading action is the fact that this could be just nothing more than a retest of this blue line, right? Like I said, we did obviously have a little bit of a downtrend ever since this 280, right? We started downtrending, and then we came up, retested it, came down, came up, retested it, and we actually broke above it on this retest. You can see two candles over here. If we zoom in a little bit, right? We talked about this yesterday, but I'll reiterate, right? Two candles here that obviously come up to the line. We're retesting it, and obviously we're having issues breaking above, and then it finally of course did on this candle, and we had a beautiful follow through. But today, as I always say, very common to retest breakouts. We pretty much came down to retest the breakout, and so far successfully, which is also a pretty good sign. So we're kind of in this range right now, and that's a pretty important range, right? 260 to 263 being that resistance level that the bulls want to break, the bears want to defend, and of course now we have the bulls want to defend and the bears want to break pretty much below this blue line, number one, which is at the moment probably somewhere around 255. But keep in mind, right, this 255 level is a high volume profile area as well, right, which is an area that we are finding some support now. So this is a bit of a battle now, because every time you go to the next level, which we did go to the next tier, you're going to get a new area of potential, areas that you have to watch out for, right? The bulls want to break this, but the bears want to defend. And then below that, like I talked about, the bulls want to defend, the bears want to break. So now we kind of wait and see which one breaks next. You know what I mean? So that's the way you're looking at it, or you should be looking at this, in my honest opinion. But again, as of right now, in my opinion, this head and shoulders pattern, definitely scary. I'm not going to lie, guys. It's a little bit scary, right? This thing can turn out to be extremely, extremely ugly if it plays out. So in my opinion, Tesla, sometime ideally next week, wants to be breaking above 263. Very, very important, right? Maybe we get some news on Cybertruck. Maybe something comes out like that, right? It is something that you should be looking out for, right? Very, very important. On top of that, of course, we also have the 21 EMA and the 50-day moving average, right? Like let's rather zoom in on that, right? So you can see on the daily, also nice, beautiful retest, right? So there's two aspects you can look at it. Simple retest, and now we just continue moving upwards because it's been successful retest. We broke out of this downtrend and we continue moving up, or this 263, 260 level keeps rejecting us, and this head and shoulders pattern might actually play out. So we'll see. But RSI looking neutral. MACD looking like it wants to flip bullish. It's looking pretty much like at 0 right now. So it's just on the verge of flipping bullish. It hasn't yet. Still can potentially continue going bearish, but it's damn close. It is damn close. We also have the 21 EMA and the 50-day moving average below us, right? So the way this is going to work is as follows, right? As we're, let's say, just going sideways, for instance. Let's say we just go sideways. Let's say we're just trading in this kind of roughly 260 range, give or take $1 or $2. Let's just say we're just constantly going sideways for the next 3 days, as an example, right? Naturally, these two are going to, especially the 21 EMA, are going to slowly start making their way back up to us, right? As we're kind of going sideways, which in a way is a good thing. Could be scary, but overall it should be a good thing, because now it means that that support level of the 21 EMA and the 50-day moving average will be that much closer to where we're currently trading, so that the support level is just that much closer for the bulls to have, some level to bounce off of without having to go down too much further, if that makes sense. So that's going to potentially happen as well, as we potentially just go sideways for the next couple of days, right? So that's another thing to consider. That's a good thing. The scary part with that, like I said, is the fact that, well, now that it's so close to us, it also requires much less of a move to the downside to now break back below those levels. So it's kind of a double-edged sword in a way, right? It's a good thing and a bad thing, right? So it really just depends on how much strength, I guess, the stock is going to be showing for the most part. So keep that in mind as well. So those, in my opinion, are the major things I am personally looking at without overcomplicating things right now. Again, we could take a look at other indicators like the squeeze, not really showing us a whole lot of information right now. So I don't think it's worth, right? We have the pivot, which usually I look at on the weekly, not really showing us too much as well, but the red lines are getting larger and larger, and the last time it got this extremely large was over here, which did signal a top, it was a top signal essentially. So if we get to an area where it's not only like a dark red line like this, but also we have this kind of transparent background behind it as well, that could be pretty spooky. So it's not there yet, obviously. It might get there. Who knows? If we get to like maybe 300 and we get rejected again, possible. But as of right now, it's showing a little bit of signs of, okay, maybe be careful, but, nothing too concerning yet. But on the flip side, again, the bullish view, perspective of this is this yellow line here, which of course is that 21 EMA. So far, we're bouncing off of it beautifully. 100-day moving average also closing above it so far. We have one more day, of course, but seems like we're going to be closing above those two as well. So pretty good sign. The MACD has just been pretty much going sideways for 1, 2, 3, 4, 5, 6, 7, 8 weeks now, just sideways, not really showing any real direction, which is interesting to say the least, right? We take a quick look at the Bollinger Bands. You can see the Bollinger Bands are definitely looking like they're collapsing in, right? Kind of similar to what we had over here, as they were kind of collapsing in, and then Tesla had a massive explosive move to the upside. Well, we're once again collapsing in, and the longer we're kind of really not doing too much and kind of roughly trading around this general level, the more and more tighter they'll get on the weekly, and the more explosive move it'll be, especially on the weekly time frame, because whenever it'll pick a direction on this time frame here, that probably means it'll be going that direction fairly aggressively and for probably a nice, respectable amount of time. So for instance, let's say it takes another couple of weeks, let's say 2 more weeks before we pick a direction and it continues getting tighter and tighter. And let's say it does pick a direction and it's to the upside. That to me tells me that the next few months should be, for the most part, overall net bullish. Vice versa, of course, it could be net bearish, right, for the next few months as well. So really depends on what direction it picks, but we'll keep an eye on it slowly but surely. And we'll take a look at it tomorrow as well, as the week does finally close out as well. So those are the most important things to pay attention to right now. All in all, you know, Tesla's in a bit of a peculiar spot here, right? We also have a doji candle on the daily, right? Obviously, very long wicks on both sides, showing indecision. Doji candle also meaning the fact that the candle itself is pretty much extremely thin. In other words, the closing price and the opening price are essentially identical, right? So that's kind of what we're seeing over here, right? Doji candle, which unfortunately usually signals a potential reversal, right? Or just indecision. So, you know, it could be a little bit concerning here as well. So we'll see how this plays out. I don't like the fact that we're getting rejected at 260 and we're not breaking above it. As a bull, I definitely want to see a break above that. So that's kind of the main thing I'll be looking at personally, right? And if we can't break above that, I will start slowly flipping more and more bearish. But, you know, the doji candle is not kind of helping that situation right now, because this thing can potentially signal, again, a reversal. And we are currently in a short-term uptrend, which, again, could be a little bit spooky. So keep that in mind. Taking a quick look at options flow, nothing too crazy here, unfortunately, right? It's not really showing one obvious direction or the other, right? We have some bearishness, we have some bullishness. I mean, the biggest premium we have is 846 in bearishness premium, right? We have, you know, 500K here, 300K here. So unfortunately, not a massive direction one way or the other. It's fairly mixed. I mean, the biggest position is obviously the bearish position, but there's also a lot of smaller bullish positions. So kind of all over the place right now. It doesn't seem like the options market really knows which way it really wants to go, right? So not super important, and it's not going to be giving us any real critical information, in my opinion. And yeah, that's kind of the main thing I'll be looking at for the next foreseeable future. And the last thing is, of course, on the weekly, we potentially still have this massive bear flag, but on the flip side, we potentially also still have this nice looking bullish inverted head and shoulders, right? So, you know, will this one play out, or will the you know, the bear flag play out? We have that, right? The left shoulder, we have the right, or the head right here rather. And of course, we have the beautiful looking, sorry, the left shoulder, head, right shoulder, right? Something like this, right? So that's pretty bullish. So is it going to play out in this fashion? I don't know. We'll see. We have to wait and kind of get some, you know, actual confirmation. And to me right now, the confirmation so far has been pretty good on the daily. We broke above certain key aspects. We broke above the 21 EMA, the 50-day moving average, the blue line, which is great to see. But like I said yesterday, to me, the one final push that I really want to see, like to really get it more confident to be bullish here, is a break above this 263 level to enter the territory of the head, to nullify this head and shoulder bearish pattern. So that's what I'll be looking for right now. But otherwise, thank you so much for watching. If you enjoyed, don't forget to hit that like button. And as usual, I'll see you tomorrow. Peace.